afternoon, everyone. Welcome to the show. Thank you for joining us. Quick overview of Barton Gold. Barton Gold is put together to take advantage of a pretty interesting opportunity in Australia, and that is that South Australia is very well represented in terms of gold mineralization and historically very underrepresented in terms of gold exploration and production. So it's an area that has been largely left behind for about 30 years. What we've gone and done is put together a collection of tenements that sort of constitute or represent the vast majority of historical significant gold production and contemporary gold exploration. So we've got about 1.1 million ounces of JORC resources now. We also own the only gold mill in the region. And our objective, rather than running back into production, is to really take a step back and focus on large-scale exploration. And that's driven by the fact that all the work that we have done keeps identifying significant new structure and mineralization. The goal there, of course, is to look at a larger scale development, which would hopefully see multiple mills running in this region. We've built an excellent team. We're very well capitalized. We're very, very busy. We've just started about a month ago, about 20,000 meters of drilling for the year, and we'll be looking to do some resource updates for the end of the year. So considering the strategy, it really helps to have a look at what we're doing from a sort of a logistics standpoint. Our southern hub is really where we're focused for exploration and resources growth. Our northern hub is essentially a development option and a regional consolidation opportunity in terms of looking at working with our neighbors to sort of bring other resources online. Why we're focused on the southern hub is that we're really looking there around an existing approximately 1 million ounce resource base. And there's very limited historical drilling across nearly 100 kilometers of shear zones that we've now started mapping out. What we're looking for there as well is large-scale open pitable mineralization as opposed to sort of the deeper, higher-grade underground mineralization that we've seen historically in the Challenger mine. So the existing mill that we do have, again, it is the only mill in the region, provides us some leverage to look at regional optionality in a number of ways, but also to look at leveraging some of our existing assets. For example, the Tarcoola project did produce high-grade gold to that mill in 2017 and 2018. Innovation is a big focus for us. We're bringing a lot of new technology into the region. I won't labor that, but it gives us a way to sort of think forward over the next 5 or 10 years and how we're going to develop a much more comprehensive story in the region. A lot of that new technology, though, is paying early dividends. We've brought in new technologies that have helped us identify multiple new structural targets undercover, which were previously unknown. We've identified 3 new gold zones for about 2 kilometers of new mineralization in that southern hub. And we're also really building that sort of South Australian identity, building a South Australian corporate team. We built a new in-house geology and project management team. And the South Australian government has very much gotten behind us as well. We've got almost $400,000 in grants thus far. On the corporate side, our board and our team really reflect a sort of forward development ambition. So we have people with a lot of experience developing mills, building mines, financing mines, operating mines. One transition that we've made recently is that Ken Williams, who was the former CFO of Normandy Mining, has joined, and he will be taking the chairmanship from the 1st of July. So we're very excited about that. We have a very tight market cap, capital structure, very reasonably valued at around $30 million enterprise value, and a very high degree of shareholder and board and management alignment. So jump back into the projects now. We'll focus on that southern hub. It's quite easy to lose the scale of what we're talking about here in these big maps. So between Tarcoola and Tarcoola, these are 2 projects that are about 2,500 square kilometers of tenements. They're about 70 kilometers apart. The opportunity for the first time in decades is to look at co-developing these from an exploration and development standpoint. The work that we've done has identified multiple large-scale mineralized systems here, and we are aggressively drilling these for growth of these projects. To look at Tarcoola, you can almost see a triangle of structure in this picture. Tarcoola is right at the center of the central Gawler Craton. So this was actually the site of the South Australian Gold Rush back in 1893, same year that the Kalgoorlie Gold Rush started. In the past 130 years, there have been a few moments in history where you've seen, very high-grade artisanal mining in the early 1900s. And then more recently, the Perseverance open pit mine was dug out in 2017 to 2018. That was producing between 3 and 6 grams per ton to our mill. But by and large, there has been no large-scale systematic work done across this region. What we are doing, as are some of our neighbors who are here with us today, is now going back and doing systematic methodic work to actually work out what's going on structurally and then look at building out mineralized footprints. With Tarcoola, starting at that open pit, what we see here is exciting is the fact that we see the potential for multiple shallow, high-grade open pitable resources. So The existing open pit there was actually developed only to a very shallow depth, about 70 meters depth. And historically speaking, there was very little drilling around that known resource. So we came in after acquiring it and did some drilling both beneath and along strike of the pit. And we identified significant mineralized extensions to depth, but also an entirely new gold zone right at the edge of the open pit. So this is something where we're getting 4, 5, 6, 7, 8 meters of mineralization at between 6 and 50 grams per ton. So it presents a very interesting opportunity for a low-cost extension of that pit. But what's more interesting is looking for repeats of these types of events. We've brought a new ultra-high resolution aeromagnetic imagery, ground-penetrating radar, with the intent of looking essentially undercover. And we've identified multiple areas that we believe may be sort of akin or analogous to that high-grade open pit. So looking to create clusters of high-grade open pits. But the big picture at Tarcoola really does come back to the big picture. We did a reevaluation of the area with the old seismic data. And what we identified was not just the genesis of that, the mineralization in the Perseverance open pit mine. So you have a structure passing through the Tarcoola formation and plumbing into a Hilteba intrusive. These are the large-scale granite intrusive bodies that are sort of the engines of mineralization in the Gawler Craton. We identified that. That's all very well and good, but we identified a dozen or more parallel and cross-cutting structures, again, previously unrecognized. And that creates the potential for a lot of analogs here. Where one of those structures come to surface, for example, is Warburton, which is a target that we knew to be of interest. AngloGold drilled that back in 1997. They intercepted about 16 meters at 3.5 gram per ton, almost from surface, and didn't follow up. And if you ask why, well, in September 1997, the US dollar gold price was 325 and falling. So, south of 10 gram per ton, it's not going to be really exciting, but we're in a very different world today. When we look at Tunkillia and combining these assets, again, we're looking about 70 kilometers south. We're looking at a completely different geological setup now. We're looking at very large shear zones. We've got about 50 kilometers of shear zone across our tenements. Where we're focused in the first instance is the Yarwandle shear zone. In the northwest corner of that, we've got our 223 deposit. It's a 965,000 ounce deposit. It's about 2.5 kilometers long of continuous mineralization. It's open to depth. It's open to strike. Most of the drilling that informs that was done when the US dollar gold price was between $300 and $800 per ounce. And importantly, there's a number of interesting satellite targets around it. Just to quickly look at a cross-section of that mineralization, as we can see, this is broad, 50, 60, 80 meters wide mineralization. But what's interesting and what we mapped out was that there are higher grade pockets where the eastern margins of that mineralization are bounded by mafic dikes. So that gives us some interesting concepts about how we might look to develop specifically that deposit. But when we also look around it, we have a number of high-grade satellites that were, again, very previously drilled to 40 or 50 meters depth. Drilling ended in high-grade mineralization between 1 and 10 gram per ton and never followed up. So we have come along now and we're sort of rapidly infilling this footprint. This is about a 4 by 4 kilometer area. And we've built a new geophysical model that has predicted mineralization and its orientation at 223 North in Area 191. We drilled that, validated it. We validated the higher grade central zone in the 223 deposit. So one hole picked up about 44 meters of mineralization at closer to 3.5 gram per ton. What's most interesting though is that same model that predicted those two new gold zones, which gave us about a 60% strike increase there, predicts that this same style of mineralization runs down the next 10 to 20 kilometers of the shear zone. So this is where we start to look at Tunkillia not as potentially a very attractive camp scale core development, but something that could truly be district scale. And it's one of those things where then you look at the sort of district scale potential of Tarcoola and Tunkillia together. We are on the very early stages of mapping out all this mineralization, all these potential resources, but there's really a 1 + 1 = 5 type opportunity here. So short summary for us is we've put together what is already a strategic platform. We're leveraging a lot of innovation. We're growing these assets quite rapidly. We have got the right team to take us not only through exploration, but into pre-feasibility and financing and development. So what we tried to put together is something that looks more like a proposition that's more like an advanced entry into an early stage district play. We do, of course, have the benefit of existing infrastructure, whether for our own or for other people. And in terms of value, we think that puts us in a very good position. When you boil this down against our sort of actual peers, truly, ASX listed, Australian domiciled bulk open pit mineralization that's sub 1.3 gram per ton. We actually trade at about a third of our peers, and important to note, amongst our peers, we are the only ones who do own a mill. So we have the ability to cross that capital drawbridge in a way that many of our peers don't. So thank you very much.